All right, I'm going to take a look at gold. We've got some signs here that we may have completed this intermediate cycle low. So just to recap, once this support zone right here um, at this prior intermediate cycle low, let's just call it about 1760-ish, 1770. Once that broke, when I saw this big down day, I said I did um, a video at the time and I said this looks like more like the start of a bloodbath phase than a continuation of a grinding move into an intermediate cycle low. Um, this is one of the characteristics of a bloodbath phase. An important support zone gets broken, and then the market just keeps selling off day after day after day. I call it a bloodbath phase. They tend to last 5 to 7 days. If we count the break of this support as day one, then it looks like we bottomed yesterday. That would be day 7. There's no guarantee of that. I have seen a few bloodbath phases last longer than 7 days, but most of them 5 to 7. That's I'd say probably 80-85% probably run 5 to 7 days. So far everything looks normal. This still looks like a bloodbath phase to me. Once this support was broken, we just continued to sell off and dropped, another whatever this was, 50, 60 points. And today we've got a swing. Gold, see here, gold did marginally and even closed above it. Yesterday's high did not go below yesterday's low. So we've got a swing. We're extremely late in the daily cycle. So, it looks to me like we've got a completed bloodbath phase, which would mean that we've put in a larger intermediate cycle low. And then let me switch over to the miners. All right, now this was another indication that maybe we were getting ready to put in a bottom. Not only were we late in the daily cycle, but the mining stocks, after this big down day, the one that started the bloodbath phase in actual gold, the miners started to diverge. They did not follow gold down to lower lows. They just turned sideways. And then today, we've got a gap above the 10-day moving average. So I'm seeing a lot of things that have convinced me that we probably put in the bottom. Now, I will say this is probably not going to be a market that you want to just immediately jump into some really heavy leverage, because I doubt that this is going to just take off in a V-shaped recovery to the upside, and that's kind of what you need for leverage to really work. Very often, metals they just bottom different than stocks. Stocks almost always V-rally out of intermediate bottoms, whereas more often than not, metals will churn, and sometimes they can waste an entire daily cycle building a base and retesting the lows. So, and at some point here, we're going to get a knockoff day, and by that I mean we're going to get a big scary down day that's going to make everybody think that this is just a temporary rally and then it's rolling over and heading back down, and that tends to scare off all the early buyers. They panic and sell because they think the downtrend is resuming, and then that knockoff day gives the smart money institutional traders an opportunity to buy at slightly lower levels if they miss the initial, if they had missed the initial thrust up. So we can probably expect one of those here within the next 5 trading days, more than likely. And even if this does turn out to be a final bottom, it would not be out of character for this to chop back and forth and maybe chew up all of the month of March and maybe even to April before we really start to get some upside traction. But as of right now, this has a lot of the earmarks that we put in an intermediate cycle low. And then let me move out to the larger chart. All right, so my feeling is that we're building a really large cup, and then here's the handle, and again a little bit of a sloppy pattern, as the right side of the pattern did make a higher high above this, so kind of sloppy, and a little bit sloppy on the handle as well. But I tend to think the pattern is still valid, and if this is our intermediate cycle low, we may be preparing to break out of this handle consolidation and start the next leg up. Now, if this intermediate cycle, say, can't get above, let's call it the all-time highs was back here at 1920. So if this takes 10 weeks maybe to get back up to 1920, then we're probably going to come back down, and this handle is going to extend another 5-6 months. But if we can build a base here pretty quick and then get a strong push up, and especially if we can break above this prior peak at 1923, then I think we're done with this handle consolidation, and then we'll be ready for the bull market to resume in force. And the next 8-year cycle low isn't due until about 2024. So I really don't think we're going to spend 4 years building out a handle. So my assumption is we're going to get at least one really strong leg up, maybe two, before we start moving down into that 8-year cycle low. Maybe may start sometime in 2023 would be my guess, is when we start that much larger and more extended correction into the 8-year cycle low. So right now we've got the potential here for this to be the completion of the handle consolidation, and maybe if we can get back above 1923, maybe we're ready for to break out of this consolidation and get our next leg up in the bull market.